Hey everyone, me Kevin here. I was wrong. In this video, I'm going to tell you exactly what I was wrong about, what difference it makes, what change I'm making, and why it's happening. Let's start with the background. What I projected, which, bear in mind, most folks in finance will never give you a projection because they are so fearful of being wrong. Most of you know, and I think that's why you follow this channel, I don't care about being wrong. I'd rather have a plan and adjust direction as needed. And in this video, I admit I was wrong about something. Let's break it down. In December and January, last December, so December of 2020 and January of 2021, I made numerous videos talking about how we were going to have a lot of coming inflation FUD, fear, uncertainty, and doubt. There would be a lot of what I called clickbait articles about how bad inflation was, and that's because we would be comparing to this whole of 2020, and we would see this massively large inflationary reading on year-over-year levels, and that we would have a summer potential reopening boom, and we would see inflation surge, especially if these two things overlapped. And that would likely lead to supply chain shortages or product shortages, and we would either be paying, I said this almost a year ago, we would be paying with increased money, aka inflation, or we would be paying more with our time as we wait longer for products or services like airplanes, deal with cancellations or whatever. These things have turned out to be true. I also, though, suggested that we would have a stock market rally in the last quarter of 2021. I said we would have this rally at the end of 2021, in my opinion, because markets would begin to realize that this inflation will not last forever and will probably have an inflection to the downside in inflationary readings when we get our September and October data. The reason I said that was because I knew that in September the unemployment boost would expire, people would go back to work. I expected the summer spending boom to go away. I expected supply chain shortages to soften out. I expected spending to somewhat fall as you go into the fall, because first you have your reopening boom, people are like, yay, I'm living life again. And then you're like, wow, I spent a lot of money, now I'm gonna save a little bit again and not go back to being as frugal as we were during the pandemic, because a lot of people saved a lot more during the pandemic. We also got a lot more. Stimulus payments and that, but that we would go back to some sort of normal level of spending, maybe normalize back to a 2019 level of spending, right? So those were my projections, and they're documented in many dozens of videos that I've made, updating you along the way over the past nearly year, talking about 10 to 11 months that I've been talking about this crisis coming and this potential end-of-year rally upon an inflection point in inflation. But I was wrong. We did not get an inflection point in inflation. Inflation instead has stayed longer, more persistently, and been larger than expected. That's because supply chain crises have been worse than expected. The amount of monetary and fiscal support that our country has gotten has been insane. In other words, the money printer has been rolling really fast, okay? People have more money than we've ever had before. In a weird way, we also thought that there was going to be an inflationary fear because we expected the velocity of money, or how much money circulates in our economy, to go back up. It hasn't. A lot of people have been taking their extra money and actually investing it and building their wealth. They're buying real estate, they're buying stocks, they're investing in cryptocurrencies, which we're going to talk about in this video as well, and a big change I'm making in my portfolio. They're learning everything that they can. They're taking things like the Zero to Millionaire Real Estate Investing course or the Stocks and Psychology of Money course, linked down below, with that 41% off coupon code expiring on the 29th of this month, which is in like 2 weeks. Which is all great. But even though the velocity of money is staying low, which should dampen inflation, we're still seeing prices go up. I expected that in October and November of this year, we would start to see inflation inflect down, but we're not seeing it. And it's partially because companies haven't been able to pass along the full cost of product increases or product price increases yet. For example, let's say I'm gonna make an iPad and I'm gonna sell you this iPad for, let's call it $1,000. This one's less than $1,000, but we're going to call it $1,000, right? Let's say it cost me $500 to make this iPad. Well, if my costs went up to $700 and I still want to make $500 of profit, I have to raise the price of this iPad by $200 because I had $200 of supply-based inflation. Price is going up for supply costs and therefore product costs. My margins get squeezed. I'm no longer making $500, I'm making $300. What most companies are indicating is that they've only been able to raise prices about half of the increase of product costs, which means that if the cost of manufacturing this iPad went from $500 to $700 or a $200 increase, I've only actually been able to raise the price of the product from $1,000 to $1,100, which is only making up for about $100 of the difference. That means we actually have delayed inflation still baked into products, and prices have not gone up fully yet, which means we're actually seeing inflation longer than expected, and it's going to stick around more than anybody thought. No, I don't want to say that anybody thought, because I know that there are many people who believe that inflation is way worse than what the government's telling us, which is true. I mean, to some degree, if there's more inflation built into this product and it has not been realized yet, then even though the government report could actually be correct in the way they're measuring it, it would actually be wrong in telling us how much inflation to expect going forward, because it has not all yet been realized in product prices. Or the reports are just rigged. Both, in fact, you could have a combination of both to some degree, right? But that doesn't matter so much. I think most of the market right now is in agreement with what we believed a year ago. What we believed a year ago was we were going to see inflation spike and then eventually taper down. And this has not started happening yet. We are right here. And unfortunately, this little shelf here is lasting longer. We're still hoping that this goes down, but this inflection point that I thought would be realized in October and November of 2021 has not happened yet. And now it's anybody's guess. Is it going to be March, or should I say Q1? Is it going to be Q2 or the summer of next year? We don't know. But what's really interesting is two big things are happening in the market, and they're affecting the way that I'm investing. Number one has to do with crypto, and number two has to do with what the market actually thinks about inflation. So let's talk about crypto first. I believed that if we got an inflection to the downside, two things would happen. One, cryptocurrencies would fall and technology stocks would go up. That's what I believed. I believed that cryptocurrencies would go down because cryptocurrencies, a lot of folks invest in cryptocurrencies because they want an inflationary hedge. This summer, when used car prices were going down before inflecting back up, when lumber prices were going down before inflecting back up, when oil prices were going down before inflecting back up, guess what cryptocurrencies were doing? Falling. The 10-year treasury rate was low this summer. It was down to like 1.25%. And cryptocurrencies were low at the same exact time because inflation expectations were falling. We thought that's it. We're on trajectory. The inflationary curve is going down. But unfortunately, the reason we got this curve down was in part due because of the Delta variant and a very brief kind of slowdown. And all of a sudden, commodity prices started going up. Used cars, lumber, aluminum, uranium, every commodity essentially has been skyrocketing. It's said lithium, you name it. And now, supply chain issues are even more strained under high product costs, and shipping issues and port congestion is worse than it ever was before, to where the Port of Los Angeles and the Port of Long Beach are going to a 24-hour shift to try to squeeze out another 60 hours of work a week just to try to get product moving. It's nutty, right? And so what have we seen over the last 3 to 4 weeks as we've seen inflation be more persistent and longer? Line it up with when Jerome Powell started talking about when inflation started being recognized as being longer lasting and more persistent, and you will see cryptocurrency prices go up. And so what I've done over the last 6 weeks is I've actually increased my cryptocurrency portfolio to be larger than anything I've had previously. previously, my max cryptocurrency holding was about $580,000. There were some fluctuations over the last 8 or so weeks where I did a little bit of selling and then buying back, so I was able to lower some of my cost bases. But in addition to lowering my cost bases in crypto, take a look at my Coinbase Pro now. Right now in my Coinbase Pro, which doesn't represent all of my crypto, I have some over, I know this sounds crazy, but I have some at Robinhood because Coinbase was down. And so I have like 70K of Ethereum and a little bit of Bitcoin, like 40K of Bitcoin over there. But anyway, so that would take me to 40 plus 2, it's just under 1.4 million in cryptocurrencies. So anyway, you could see that I've actually placed a lot more money into cryptocurrencies than I ever have before. And I'm doing so because I recognize, at least for the time being, the inflationary fears are going to stay, and I want to be on that ride. So I'm increasing my allocation to cryptocurrencies to about 6 to 8% of my portfolio, and I'm considering raising that to 8 to 10%. And I might shave that back down once we get to that inflection point. Now, don't get me wrong, I love cryptocurrency, so I don't want anybody to think I'm like paper handing. It's trading. I know I'm going in to make money and to trade, right? There are fundamental ways to invest, there are technical ways to invest, and then there are momentum ways to invest. This is part momentum, part technical, and then part inflationary hedge kind of trading. So it's a little bit, in my opinion, a mix of all. But anyway, I'm going in with a very clear mindset that I'm increasing my position here as a hedge. But at the same time, there's something really interesting and weird that's happening. And this is the second thing that's happening with price action, and it has to do with tech stocks. Folks, tech stocks are starting to blow up again. And this is really weird because remember, the whole point of me saying I think there's going to be an inflection to the downside was to suggest that tech stocks would do well. So I'm like 80% invested in tech stocks or fintech stocks. Affirm, I'm in on this thing at a cost basis of like $95, maybe even less. It could be something like $88 because I just kept adding. I bought a little bit, then I bought more, and then I bought more. Anyway, so the thing's at $150 right now. It's insane. It's just run. It's crazy. Enphase, I've added like crazy to this in the dips over here. Now we're coming back to 173. We're on a run again. I've got over somewhere around $9.5 million of Tesla. This thing has been on a straight run up in just the last 2 months. And you're seeing it over and over. Look at SoFi, another fintech company that's blowing up here recently. You got a nice trend up. Look at Matterport, another one of my massive favorite holds. This thing has totally left its summer channel over here. This was IPO insanity and momentum, but it's finally getting a fundamental liftoff in its pricing. And so we're seeing this really cool transition, which you're not seeing in everything. Like you look at something like DocuSign, you're actually seeing a little bit of a bleed down as COVID fears are going away and the stay-at-home traders are kind of exiting positions like DocuSign. That's okay. I mean, I'd like DocuSign to be cheaper so I can actually build a real position in this. But otherwise, you're seeing some good growth in some of my favorite stocks. So in a weird way, it's almost as if we're potentially still seeing the start of an end of 2021 rally, even though we didn't get the inflection point in inflation yet, which is crazy because it's like, wait a minute. We thought the inflection down in inflation would lead to a rally. Instead, what ended up happening is the catalyst, the major fear catalyst of things like Evergrande, the debt ceiling, the budget deficit, the infrastructure packages, the taper, all these things happen and uncertainty escaped our market. Like now there's nothing to really be fearful of anymore, at least like near term. There's really nothing where people are like, oh, this is it. This is the next big catalyst for a crash, right? A lot of fear and uncertainty has escaped. So we're seeing this sort of rally. But the other thing that's crazy, and this blows my mind as well, is the 10-year treasuries and 10-year break-even rates are starting to rotate down again. When they've certainly capped. So take a look at this. If we go over here to a 1-month chart, we can kind of see this capping of the 10-year treasury yield with a peak around 1.61, which is way lower than that 1.75-ish that we had at the beginning of the year. So we never got back to those levels. And more recently, which is amazing, we're seeing a decline after getting higher than expected CPI data. Why? Because folks, The market knows, yes, inflation is here. It's going to last longer, but we're not going to hyperinflate. We've got a very strong and efficient economy. Let's invest in the tech companies that have high profit margins, that have cleaned up their workforces and have a more efficient workforce, that are investing in better supply chains. Because I'll tell you, we're going to look back at 2021, and we're going to look back and go, damn, that was the year to just buy. Because in my opinion, in the years going forward, we're going to look back and go, man, how did these companies get so freaking efficient? How did they get their margins up so high? No guarantees. The market could fall, it could slow down and all this, but I've put almost all of the cash I have into technology and crypto. About 6 to 7% in crypto, 80% in tech stocks, and then of course a little bit of cash to pay some taxes. But folks, I'm very, very, very optimistic. I'm optimistic about what I'm seeing in the bond market for treasuries, predicting that slowdown in inflation in the future. The market's accepting that inflation's going to be here for longer. And while inflation's going to be here for longer, we're pushing crypto up. That makes sense. And this is the cool thing that I love. We're actually also participating in potentially that end of 2021 rally in tech stocks going up because of TINA. There is no alternative. TINA. Like, why would you invest in a dying company or something that's not innovating when you could invest in a big fat innovator? Something that has really good profit margins. Now, that's not to be confused with a company that's losing money hand over fist and is speculative. Some of the newer SPACs, the newer companies, dangerous. You got to be careful. But the big boys, the ones with really good profit margins, particularly some of my favorites, Enphase, Etsy, Tesla's margins, their gross margins are amazing. Affirm, even though they're losing money. These are companies to pay attention to. Very, very excited. I can't be more excited for the future. And I'm really happy with all the decisions that I made so far. Even though I was wrong about the inflection point in inflation, the market is reacting better than I could have expected. So there you have an update. If you like my thoughts and perspectives, check out the programs linked down below on Building Your Wealth. And folks, we'll see you in the next one. Thanks so much. Bye.